We're looking at the AS Bryden takeover by Seprod. What is going on?
So, to keep it simple, Seprod wants to increase its stake in AS Bryden from 50.14% to a maximum of 79.99%. So basically, what would happen is that for every 1,000 shares of AS Bryden you surrender in the offer, you get 396.43 new shares in Seprod. It's effectively a share swap. What this means is that Seprod would have 79.99% ownership of AS Bryden, and some of AS Bryden's larger shareholders, somebody based in Trinidad, will become owners of Seprod, which is the main business, owning all these sprawling entities. So it puts into context. So Seprod, 50% controlled by Mustang Group and affiliates, and then Seprod, owns half of AS Bryden. AS Bryden owns 79.99% of CPJ. So, that consolidation, in terms of the interest would, improve the net profit attributable to shareholders for Seprod. But at the same time, one thing I point out to everybody is when you see these kind of deals, ask yourself what is really taking place. So, put in perspective, assuming that assuming that the entire yield is taken up and Seprod's issued shares go from 700 million to 900 million. In the case of a coconut industry board, we do not have any shares in AS Bryden, but let's assume they don't have any shares. They're taking Seprod going from 22.28% to 17.94%. And what you would see is like Michael Conyers and some of the other major AS Bryden shareholders becoming the fourth, fifth, sixth, seventh largest shareholders in Seprod. So, effectively speaking, you would have seen Seprod do a leverage buyout, of AS Bryden, and AS Bryden buying out the owners of Micron Holdings and CPJ, with shares, and then those owners getting a chance to now have a stake in the main company. And since last year, Michael Conyers, I believe he's actually the deputy chairman of AS Bryden. He's actually the fifth largest shareholder in General Accident, which is also a Mustang Group subsidiary. So I'm just trying to connect in the dots for people to see that in every deal, apart from the rationale is put forward by the company, also look at what is the end result when the event does take place. It's a little bit of a headache that Trinidad is still behind the times, and I have to give a shout out to NCB Capital Markets because they are still the only broker in Trinidad at the moment that allows for you to process your application digitally. So for AS Bryden shareholders here in Jamaica who want to participate in this takeover bid, and get Seprod shares, Republic Wealth Management in Trinidad said that your documents, which is the acceptance form and the actual your ID, has to go in physically to their offices in Trinidad, which is ridiculous, to be honest. But where there's a will, there's a way. So it's a little bit rough for the AS Bryden shareholders because some of them who would have bought in before communicating public got diluted when there was the Micron Holdings acquisition, got diluted again with the takeover of CPJ, and now instead of getting a chance to move the shares up, from AS Bryden to Seprod, they're kind of be denied in this case because of just the inability to pay an extensive cost to send documents to Trinidad, just because of the time it would take for it to reach the offices and be processed. So it's an interesting, play. But one thing I took note of from Seprod's audited financials was that they have created a new joint venture. Well, it was a subsidiary, as they said, but they say it's a joint venture, called St. Thomas Development Limited. They have 50% stake in it. And, it was interesting to see the tweet by Seprod CEO Richard Van Doe today about Morant Bay. So a lot of different plays taking place all at once. And Seprod itself, is still gunning based on the timeline that the CEO Richard Panday would have made back in 2023 for $1 billion US worth of revenues by 2026. They were at 133 million, 133 billion in revenue for 2024. So they're just about 30 billion shy from that target in a sense. So something to watch out for.
You mean for the year so far?
So for the 2024 financial year, they did $133 billion worth of revenue. So at JMD, I should say. So to put that in context, it's still a pretty good increase, and that's 850 million USD in effect. So just 150 million USD left to reach that $1 billion US target in terms of revenue.
When does their financial year end?
December 2020, December each year, December 31.
Okay. So how substantial or how significant because they want to acquire the rest of the AS Bryden shares. They already have some of the shares. How substantial has the acquisition been for Seprod's bottom line so far?
So to put it into context, from a console numbers perspective, AS Bryden was $77 billion, contributed $77 billion to Seprod's revenue last year. So you're talking about a little over half of Seprod's revenue is coming from its acquisition did in 2022. And most of the growth that they've seen towards that $1 billion target is coming from AS Bryden. So they acquired CPG last year. They acquired Retail Associates Limited in Barbados, which owns Stansfield Scott. They acquired Presta Bryden Pie. They created a new subsidiary this year in Guyana that's going to be focused on distribution. There already have 2 businesses in Guyana already, but they created another subsidiary for distribution in Guyana. So pretty interesting, developments in terms of this new organic business plus acquisition business as well.
You mentioned that for AS Bryden shareholders, they basically have been diluted. But how substantial is this for Seprod shareholders?
So it's going to be a bit of pill, but something to swallow, because as I mentioned a while ago, example of Coconut Industry Board, I believe they're the second or third largest shareholder in Seprod. Diluted from 22% to 17% just based on the assumption that all the shares are taken up in the offer. But at the same time, it does give space, once again, for them to potentially find more creative means again to fund acquisitions, because most of the acquisitions that AS Bryden has actually completed, has mainly been through a mixture of debt, preference shares, and ordinary shares. So whereas most acquisitions are done mainly with cash, funded by debt or internal cash on books, AS Bryden does it mainly by non-cash means. So when they acquired Micron Holdings in November 2022, that was done with ordinary shares of AS Bryden. When they acquired Stansfield Scott, that was a mixture of cash and preference shares. When they acquired CPG, it was a mixture of debt that they got from a loan and issuing ordinary shares to some of the former owners. And when they acquired the remaining 10% of Bryden Pie in 2024, it was issuing preference shares to the former owners. So I'm just pointing out that basically when Seprod goes to 79.99% again in ownership of AS Bryden, they can, explore more creative means again to potentially issue shares in AS Bryden and just make AS Bryden that platform to facilitate more acquisitions across the region.
But despite that, though, David, would you say that this is a good thing for Seprod shareholders? Because ultimately it means that Seprod's revenue is going to increase. The top line and bottom line are going to increase, and Seprod is a good dividend paying company, by the way. So it's a good opportunity, even though you might be diluted.
So just for context, Kalilah, Seprod already consolidates AS Bryden, so the revenue to bottom line is already accounted for. The advantage of doing this kind of transaction is that instead of just Seprod only accounting for 50% of of AS Bryden net profits for net profit attributable to shareholders, they'd be able to account for 8%. So the net profit attributable to shareholders would increase, but revenue would still remain relatively steady state growing because it already consolidates AS Bryden.